So we are now into the first half an hour of Wall Street opening, which can often be a trap, sometimes both ways, up and down. And then from 10 a.m. into lunchtime, that would be my window for looking for an opportunity to trade these currency pairs. They're not my go-to um, preferences for trading. I prefer to start with gold and silver, oil, and the indices. But nonetheless, the euro and pound are shown by the TrendPredator indicator as follows. So the euro is in a downtrend. As you can see, we've got a very bearish constellation of time frames apart from the monthly chart. The monthly chart is bullish, um, but we're currently somewhat bearish on the other time frames, such as the weekly, the daily, the 8 hour, and we're toggling between bullish and bearish on the 4 hour chart. Let's have a quick look at the chart and see what's what. So, a bit of volatility we would be expected in the Wall Street Open. We're currently moving in line with the weekly and daily and the sessions bearishness. So we've taken the highs of Asia in London, and then we've put in a low for the day. We're inside of London's range, but we're below yesterday's low. So while below yesterday's low and the Asian lows, we're bearish. The chart is bearish, and we expect a downside continuation in a downtrend. Okay, so perhaps it's looking something like this for the immediate future. And in that context, then trading through the value area of last Thursday, there is a value area low, a naked value area low that this price could gravitate towards. If above yesterday's above yesterday's lows, we would need to get through the closing price to take on the point of control from today and the naked value area high, because the point of control has already been done from yesterday in the open of London. Then we'll be targeting up towards the value area high and Monday's lows near 104.70. But we would need to get through that closing price around about 104.45 for the upside alternative. But at the moment, I'm bearish while below yesterday's lows, essentially, with 104, a test of 104, the figure in mind. And then with the pound, it's a conflicting market at the moment. We've got the monthly, weekly, and daily confliction there. So not something I'd be looking at to trade because it's too conflicting. Opening up the chart, we can see what would need to happen for this to be tradable. So we're inside of last week's range. That's bearish because we've broken out of it and then come back inside of the highs from last week. So that's bearish. For the day to align with the weekly chart, we would need to break below yesterday's lows. So we're toying with that at the moment, that level. It's at a monthly breakout level, so that's a bit tricky because we're just resting on January's highs. But if we get below those highs, I mean, we've come down right into the level as support. If we get below that, that would be bearish for the foreseeable future, much like what we were looking at on the euro. And then we could get below the highs from last Thursday and the value area low from Friday. If we get below there, then we're looking as though we could get into the value area high from Thursday, potentially as a downside target, which might align with a extension of the range. So if we measure the coil, high to the low, it comes in just ahead of a 100% range expansion of that coil. So that would be a nice landing spot for a target, potentially. We can often see big moves on a Wednesday, midweek, coming out of a coil especially. So potentially that could give us something. Okay,